What's happening, y'all? Y'all know, like every week, I'm gonna give y'all some free plays. Had to lighten up the room a little bit. My bad. All right, so I'm gonna give y'all some free plays, just like every Sunday swing trade setup. I'm gonna give you the temperature of the market, the direction I think the market's gonna go. Give y'all some free swing trade plays for next week. So let me start it off. Y'all know I don't like to waste y'all time. Let me start it off with the fear and greed index. And remember, when the market is fearful, you want to be greedy, and so on and so forth. When the market is greedy, you want to be fearful. So the fear and greed index kind of lets you know how people are feeling about the market, right? So we got fear. The market put fear in people's hearts. That means the market's been going down, but it's higher than last week, which means the market has been going up. So we in the market cycle where first you have expansion, then you have a peak, and you have after the peak it's kind of like a stagnation. So usually in that time it kind of like plays with you a little bit. Like the market will go up, it'll go down, and it's like unsure of where it's gonna go. But then you get a contraction, right? So in my opinion, the fear and greed index, if I was to look at this alone, this would tell me that I should expect the stock market to go up. There's less fear in the market than it was a week ago, but based on the market cycles, I have a feeling that the market should be going down. But that's just the market cycles. Let me pull up the charts. Let me pull up the charts. Let me pull up the VTI, the total stock market index, and let's see what the VTI is talking about before I give you all these plays, right? So let me pull up the VTI. All right, so the total stock market, um, on the daily chart, to be honest, the total stock market looks kind of bullish. Um, we could probably expect the total stock market to continue to go up. Now, the last candle that we have is a doji, and the doji usually represents a reversal, right? So the doji, let me pull up the doji candlestick so y'all can see this. So that last candle all the way to the right, you read charts from left to right. That last candle all the way to the right on the daily time frame is a doji candle. So let me pull up doji for y'all so y'all can see what that is, what that looks like, what that represents. So the doji is a candlestick, is a neutral indicator that provides little information. There are rare, they are rare, so they're not reliable for spotting things like price reversals. Doji formations come in three major types, right? Is a doji bullish or bearish? The doji, it appears at the end of an uptrend, are considered to be bearish trend reversals. And those that appear at the end of a downtrend tend to be bullish reversals. So we got one saying that, it don't really mean too much, and one that's saying it's a reversal candle. I usually look at dojis as a reversal candle or like indecision. Like on that day, the market wasn't the buyers nor sellers won on that day. That's basically what a doji is. It's not really telling you that the market is going to keep going up or going down. It's either a reversal or an indecisive candle, right? So if we go back to the chart, the last day on the total market was indecisive. But if we looking at the MACD just crossed over into green territory. This one right here. If you don't understand the MACD, take a look it up or whatever. But the MACD, if you notice, when the MACD crosses, when the line crossed, that's when the stock market changes direction. It crossed down here, the market went down, so on and so forth. But on the MACD crossed upwards. So we might, and the doji candlestick is on top of above the moving averages. So it does look like I also see a double bottom. Let me show y'all what a double bottom looks like. But I also see a double bottom pattern on the total stock market index. So take a look at the chart. Now I'm gonna pull up what double bottom is so y'all can see what I see. All right, a double bottom is a technical analysis chart pattern that's designed and changes in trend and a momentum reversal from prior leading price action, right? It's when the market goes down to a point, goes up a little bit, goes back down to that same point. But you do not confirm a double bottom until it breaks the neckline, right? So we're gonna go to back to VTI and we're gonna look at it. We're gonna see what it do. So a double bottom, you would not consider this a double bottom until it breaks this. So if the total stock market gaps up in the morning in pre-market, then you could expect it to continue to go up. Now we're looking at the weekly time frame. On the weekly time frame, we got a bullish engulfing. That's another bullish signal. Okay, so the fear and greed index, there's fear. On the total stock market, we got a double bottom on the daily time frame, and we got a bullish engulfing on the weekly time frame. So let me go over the bullish engulfing with y'all. As you can see, you gotta learn these patterns. After a while, you'll just be able to look at them and you won't have to study them or look back at them no more. But you do have to have proper pattern identification. So this is a bullish engulfing. It's a candlestick when it's a day where this market just goes up a lot, right? But it engulfs either one day prior, but it's even better if it engulfs multiple days prior. So if a green candlestick is much larger than multiple days before it, or at least the day before it, it is considered a bullish engulfing. A bullish engulfing is also a reversal pattern. So it's a pattern where the stock market is going down, and then on that, day, week, whatever the time frame is, it engulfs the days, weeks, or whatever prior to it, mainly the candle prior to it. So this candle last week, the candle engulfed the last 3 weeks. So it looked like to me the market is going up, y'all. It looked like to me the market is going up. Now based on the indicators, on the monthly time frame, I do think we are due for a pullback at some time in the near future. If not next week or the week after, probably sometime in February. We had a nice run up, and in my opinion, I think we will be coming back down within the next, week to month period, right? But the chart is telling me that the market is going up. The fear and greed index is telling me that the market is going up. So I'm gonna get into the plays and I'm gonna explain the plays. I got 3 of them for y'all. 2 of them are really like setups that I like, and one is gonna be like more of a momentum, like following the trend type thing. So I'm gonna start with the momentum one first, because the oil has been running up. You know what I'm saying? And when I say oil, I'm talking about gas stocks like Chevron, Exxon Mobil, Occidental Petroleum. That those stocks, the oil stocks, are the stocks that have been leading the market, right? While everything else been kind of either fluctuating or going down, these gas companies been going up. So the trend is your friend. So this would be more like a trend following play right here. Um, Now, did it run up too much and it's time to come down? We'll see. But if you want to follow the trend on the hourly, as you can see, we're staircasing. That's an uptrend. You know what I'm saying? When you see the stock staircasing, it goes up, levels out, goes up, levels out. That's an uptrend. So that's on the hourly time frame. On the 4 hour time frame, I mean that thing just moving on up, right? You go to the daily time frame, and we look like we got a three white soldiers, right? So let me pull up three white soldiers. You know what I'm saying? Y'all tell me what y'all think about this. So three white soldiers looks like it is another reversal pattern. As the market is coming down, you have three bullish candlesticks that come after each other. So I guess I wouldn't consider this a three white soldiers because it doesn't meet the criteria of changing the direction of the trend. So you see the three white soldiers, it happens after a downtrend, basically showing like the buyers are taking control. The price then went down and now it's at a price where the buyers love it or the institutions love it and they're lowering the boat on this price. And that's the bullish engulfing, right? So if we back to the chart, back to Chevron, I would not call this a bullish engulfing just because it is a looks like it's a continuation of the pattern, but it could keep going. Now, if we look at the weekly, we do have a bullish engulfing on the weekly time frame. We do have a bullish engulfing on the weekly time frame, which I like. And on the monthly time frame, yeah, I kind of like this one. So this is more like a momentum play. We also got a bull flag, it looks like, on the monthly time frame. So oil has been the case, and if Chevron breaks, if Chevron breaks this like 173.8 area right here, if it breaks that, then it's probably gonna hit up here somewhere. Um, because it's looked like on the monthly time frame is forming a bull flag. So the longer the time frame is, the longer you can expect the play to play out. If you see a bull flag on a daily time frame, you might can expect it to go up, 2 days, 3 days. But if you see it on the monthly time frame, then it's like, okay, this thing could probably go up for a couple months. So let me pull up the bull flag so y'all can see what the bull flag looks like and how that operates. Now it's up to you. You gotta do your own pattern research and candle research. But in this, you're gonna get pattern. You're gonna get some education, but you're not gonna get the basic level education. So make sure you learn your candlesticks and your patterns. But this is what a bullish engulfing looks like. It's not a confirmed, my bad, a bullish flag. So a bullish flag is not confirmed until it breaks the top level of the consolidation area. So if we go back to the chart, we got you got a flagpole, consolidation, and then continuation. So we got the flagpole and we got the consolidation. If we break, if we break this 170, 173.70, let's say 174. Let's make it even. If we break 174, Chevron might be going up and going up for a minute, right? So That's Chevron. And that's my trend following play. This other one, I guess you could consider it a trend following play too, because this one been running up. But it's also I really like the setup. So if we look at the hour time frame, we got it staircasing, right? We got a clear trend. Coinbase is staircasing, right? So now we're gonna hit the 4 hour. Okay, I was just making sure I ain't lost y'all. Sometimes I get all caught up and don't even know where I'm at. If y'all see what I'm seeing. So on the 4 hour time frame, we got Coinbase. We got Coinbase with a double bottom pattern. On top of that, it has already broke the neckline on the 4 hour. So Coinbase already, according to the 4 hour, it already broke the neckline of the double bottom pattern, right? So let me pull up double bottom. And basically what these patterns are and these candles, this is all price, right? So these patterns is what you expect the price to do. Always wait for confirmation though. But you got a double bottom, a technical analysis chart pattern. Hold on, let me share this with y'all. Is a technical analysis charting pattern that describes a change in trend and a momentum reversal from the prior leading price action. Look like all patterns are like reversal patterns, right? So if you look at this, it's a momentum reversal. So it was coming down, it went up, came back down to around the same area, and now it looks like we're going up. So we got a staircase on the hour time frame. We got a double bottom on the 4 hour. We got a double bottom, and this is already a confirmed double bottom. Now, which makes this one a little scary, which indicators, don't mean anything, and the Bollinger Band can always adjust. But this red line up here is the top of the Bollinger Band. And if you notice, price typically stays within the Bollinger Band. If I rewind this back, y'all could see. But you can see other areas and points of times where it does go outside of the Bollinger Band. So the Bollinger Band is not perfection, it's not gospel, but I do look at it, as a possible alarming sign. However, Coinbase did break the neckline of that double bottom. We got a bullish engulfing on the weekly time frame. Coinbase looking good. All right, and it looks like we got a cup and handle on the monthly time frame. Right. So take a look at that pattern. I'm gonna show y'all what the cup and handle looks like. So that's the cup and handle. It basically forms a cup, then does somewhat of like a bull flag, and then it goes back up, right? So let me make sure I'm sharing this with y'all so y'all can see. So Coinbase looks like it's doing a cup and handle pattern. You want to wait for it to break that upper resistance level neckline of the cup, right? So we go back. Let me pull it up. So we go back to Coinbase. You don't confirm. Yo, I already got it up. So it's not a confirmed cup and handle until it breaks where it's at right now, which I got a feeling it's gonna go up. So we got Chevron, Coinbase, and I got one more for y'all. I like Apple this week. Yes, sir. Yes, ma'am. I like Apple this week. So let me run through the different time frames and show y'all why I like Apple. So the monthly time frame don't give me nothing for Apple. On the weekly time frame, we got three touches of support. Not only do we got three touches of support, but the RSI, this indicator that I'm making bigger and smaller, the RSI is oversold according to the Bollinger Band. So it's not necessarily oversold. When it's oversold according to the Bollinger Band, I don't take it. I don't take it as like a strong confirmation. It just give me like a hint as far as like hidden levels. But we're not oversold according to the. We're not oversold on that RSI. But we got three touches of support. So let me show y'all what that looks like. I'm giving y'all all the game on this. All right. So the third touch of support is significant, right? It's a level of support because you got vertical and horizontal lines of support and resistance, right? Areas where price just every time it go there, it just seemed like it just keep bouncing, right? So this is what the third touch of support looks like, right? And you can see it's like just constantly rejecting off of this line. So after third touch of support is usually a good entry to go long or swing trade, what they consider going long. So we'll go back to the chart, and as y'all can see on the weekly time frame, we got a third touch of support. Let's go to the daily time frame. We got a third touch of support. But what I also like about the daily time frame is we got a third touch of support, but we also have a divergence, right? And a divergence is when the stock is making higher. I mean, you have so many different divergences, right? You have when the stock is making lower highs and the indicator is making higher highs, vice versa. But mostly on here, I always show the bullish divergence. So you got the stock making higher lows and the indicators making lower lows, right? Let me draw these divergences for y'all, right? The indicator is going down, is trending down, but the stock is trending up, right? So we got the stock making higher lows and the indicator making lower lows, right? So we got a divergence on Apple. So I like that. And like I always say, the Bollinger Band is not like a solid key, like, oh, this is guaranteed to not go any lower because it's at the bottom of the Bollinger Band. It can always go lower. But we've been on a downtrend and we're near the bottom of the Bollinger Band, right? So we got a divergence. Let me pull up divergence so y'all can see. Um, see what that is. If you watch my show before, you know I done pulled up the divergence for you before. All right, this is the divergence, right? And the divergence is a very strong signal. But you do have to wait for confirmation because the divergence has faked me out before. So this is a divergence. You got if a price is making a lower low and the indicator is making a higher low, or if the price is making a lower low and the indicator is making a higher low. That's bullish divergence, meaning that you're expecting the asset to go up in price. Bearish divergence is if you got the stock making higher lows and the indicator making lower lows, or I mean, sorry, higher highs and the indicator making lower highs. And you also got if the stock is making higher highs and the indicator is making equal highs, right? The bullish divergence for me is a lot easier to spot, and I don't usually swing trade in a downward direction because over the long term, the market goes up. So I like the day trade when the market is going down, and I swing trade when the market is going up. But that's a divergence for y'all, and those are the different types of divergence, right? So on Apple, we got a divergence. So we got three touches of support. We got a divergence. On Friday, we got a little bit of resistance. So this candle, if you see this long wick down at the bottom, it was something that pushed that candle back up. It was going down for the day, and towards the end of the day, it got pushed back up. So I just drew a little line right there to see if it was a strong level of resistance in the past. Um, and I don't, it ain't really look like it was a strong level of resistance. Um, to be honest. So I mean support, my bad, because you bounce from support. So I tried to see if it was previous support or resistance. And I don't think so. I don't think so, to be honest, but we gonna drop down to the 4 hour. So on the 4 hour time frame, the indicators look like we Apple wants to switch up into the upward direction, but we also have a doji candle at the bottom of a downtrend. Doji candles are those indecisive candles, usually, either meaning that nothing or a potential reversal, right? So we're gonna go to the hour, and the indicators on the hourly time frame look like we already are moving in an up direction on the hourly time frame. So when these two indicators down here turn green, these are both the MACD indicators. That it is a good sign for the market to go up. All right. So if you see back here, it turned green right here, and the market went up. And it was a little late noticing when well, actually, it turned red the day before a big drop, right? So another thing too on this indicator, the RSI, when the lines cross, it means that there's a directional change. So the lines crossed on the RSI, the stochastic is oversold and crossing. So I got a good vibe about Apple. Let me look at the monthly just to see. All right. Apple's still bullish on the monthly time frame. So that's my watch list, man. I gave y'all a momentum play with Chevron, and then I really liked Coinbase. I really liked Coinbase setup. I really like Coinbase setup based on the Bitcoin and crypto run, but also the setup. And Apple looked really good too. Another thing you got to consider outside of the setup, you got to look at the financials, and you got to also look at what's going on in the world, right? So the reason why I even looked at Coinbase in the first place is because crypto has been running up, and Trump is pro crypto. The reason why I was looking at Chevron is because Trump is also pro oil, but also I looked at Chevron because of the market cycle. So the market cycle that we're in, oil or gas companies are the ones that perform pretty well. So I gave y'all the three plays. Wait for confirmation. One of the three at least guaranteed to hit for a swing trade. Y'all like and subscribe. Check me out next week on the swing trade setup.